Hey everyone, this is Dave Lewis with High Impact CPA. Hope that you're having a great day so far. Hey, we took a week off for some rest and relaxation for everyone here. Now we are back in the little corner office area doing another video, and we are talking once again about the one big beautiful bill and all of the different tax provisions that have changed because of it. Uh, some planning strategies that you can implement as a business owner or individual. And today I'm talking about probably the most impactful one for business owners that you can utilize this year and moving forward as you go. And that is, of course, the extension on 100% bonus depreciation. So, to give a little bit of background, just from an accounting perspective, say you buy a piece of equipment, right? And it's going to last you more than 1 year. So, let's say, I don't know, tractor costs you $100,000. You think it's going to last you 10 years. So, from an accounting perspective, every year you're going to take 1/10 of the cost of that asset as a depreciation expense. So, it makes sense because you're trying to match up the income that is generated from that asset with the usage of that asset. And that's all fine and dandy. That's great for accounting theory, works well. But the tax code provides a few extra benefits for business owners. Beyond that. And bonus depreciation is a perfect example. So I'm actually going to pop up a short presentation here. I know it's a PowerPoint. I'm an old man. You're going to have to get over it. So here we go. So what bonus depreciation does is it essentially says, well, let's take that entire amount of depreciation that we would spread over a number of years, and let's take it in the first year. And that's what the 100% means. It means if I go out and I buy a $100,000 capital asset with a useful life of 20 years or less, so basically anything other than real property, I can depreciate it all in this year. So, and reduce my taxable income by a massive amount. Uh, so in the past, if my presentation will work. So with the Tax Cuts and Job Act that happened in 2017, there was a phase out of this bonus depreciation amount. So we went from 80% 2023 all the way down to we're at 40% in 2025 before this bill passed, meaning I buy a 100,000 piece of equipment and I can take bonus depreciation of 40%, so $40,000 right off the top, and then I would depreciate the remaining amount over the tax life of the asset. So what this has done, the big beautiful bill, is this is now a permanent provision, meaning until Congress changes it again, it's going on in perpetuity. So every year, if I place qualifying property into service for my business, I can take a 100% write-off on that. So imagine that's huge for cash flow purposes. If it essentially means if I'm making capital investments year over year in my business, one, I should be growing more rapidly, and two, I'm going to pay way less in taxes than I would have. So for the 100% bonus depreciation, that's for any qualifying property that's placed into service after January 19th of this year. So if you bought something on January 1st, sorry, old rules apply, but everything after January 19th of this year, you get a 100% bonus depreciation. I'm going to let you guess why they picked that date. I'm not going to get into it, but there's a reason. And this is more of the same. I'm not going to rehash that, but so what is actually the qualifying property? So it's got to be to qualify for the 100% bonus depreciation, has to be depreciable under makers, which is just the acronym for basically tax write-off, modified accelerated cost recovery system. So it has to have a useful life of 20 years or less, which is almost all assets other than real property. So residential rental and non-residential commercial property, those have longer lives, but we're going to talk about a little provision at the end of this where you can still take advantage of this if you do what's called a cost segregation study. Just lost the word there. So we've already kind of gone over this, but you can see the two differences on the right-hand side of the screen. If you bought an asset for $500,000 this year, under the prior Tax Cut and Jobs Act, you could take $200,000 in a first year scenario. Now you can take the entire 500,000. So you get that 300,000 additional deduction As far as planning goes, we've got timing considerations. You might want to delay the assets. We're well past that at this point. The biggest thing I want to talk about is actually the cash flow advantage. Because with the bonus depreciation, you can not only, one, have more cash in your pocket to reinvest immediately and put it back in your business, put it into your working capital, do other things with it where you can earn a return on it. The other thing that's not mentioned here in this presentation is that if your bonus depreciation puts you in a loss scenario, so say on paper, your business is now suffering a loss, you're losing money. With the other accelerated depreciation provision of Section 179, you could not do that. You could still take 100% depreciation through Section 179, but you couldn't create a loss with it. It would have to flow forward into future tax years. The crazy thing that is the ability to take a loss does is you can then net that against other forms of active income, right? So if you've got other businesses that are making a profit that you're actively involved in, you've got W-2 income. Now this can help offset that taxable income and you can pay a heck of a lot less in taxes. Whereas with, again, the Section 179, you can't create a loss in the business, you just carry it forward. So huge implications there. So that's pretty much it. The way you want to plan it now is, hey, if we were maybe looking at a big capital purchase into the future, maybe next year, and depending on what your tax liability might be looking like this year, it might be better to push that purchase into the current year and get that asset placed in service. And the the date matters. You can buy up to December 31st of this year. And as long as it's placed in service, it's ready to use for business. As of that date, doesn't matter. You're going to still get the 100% bonus depreciation for the whole year. So just consider the timing differences of some of the asset purchases. It's also important to actually look at a longer term time horizon and decide, hey, do we want to take bonus depreciation this year? Typically, the answer will be yes, but it's not for everybody. So this is where you really need to sit down with your tax professional and go over a plan and say, hey, if we're looking at a lot of future growth, maybe that's when we do the purchases, or maybe we elect out of bonus depreciation for a certain set of class of assets during the year. It's a lot to think about, I know, but the big takeaway is 40% bonus depreciation is gone this year. We're back up to 100%, and that is now permanent moving forward. So a lot of your tax plans may have just changed. If you need help looking at your tax situation, I encourage you to reach out to us at High Impact CPA. We'll have a link down in the description. As always, like and subscribe to the videos if you can, and we'll look forward to the next one. Thanks, everybody.